1 month ago, we saw these two signals appear, both of which have 3 weekly bars in them, making them a longer term movement in the markets. Now, from that point, we are expecting a rally for Bitcoin. We've seen that rally, and this week we've now seen the correction unfold. We're looking at the two particular signals here, the three red weeks and 3 down bars. There it is, balloons are up. Like and subscribe to the channel if you are new here. If you enjoy the content, and of course, triple smash the like button. Now I've got Bitcoin, the stock markets to get through as well. 9 out of the last 12 weeks hitting new all-time high prices. So although we're seeing some bearish signals for Bitcoin, I've got some good news as well when it comes to the stock markets and the macro cycle. Along with that, heaps to get through with cryptocurrencies as well, as of course we've now begun to see many of those begin to correct, some of which are attempting to get to our support levels. So today's video, lots to get through. Follow up on previous videos as well that I've been covering, especially things like gold and silver. You guys wanted to see more about that in the comments, as you mentioned, and of course, Bitcoin and the stock market. So going to start with Bitcoin. Nice little update here. The 3 red weeks is where we will begin. Now from the all-time high price, we're just looking at weeks that were red, and to be red, they just had to close below the open price. So the open price for the all-time high was 119,300, the close was 117,000. So then we saw that happen 2 more weeks in a row. Those signals have typically said that there is going to be at least a slowdown in the movement of the price, but more importantly, that we're looking out for is any sort of correction from that 3 red weeks. Typically, after we see the 3 red weeks, there is a slight rally in the price of Bitcoin. And as we've measured them before on previous videos, it's somewhere in the vicinity of 6 to 13-ish%. Of course, it can fall outside of that, but that's somewhere in the average that we've seen before. When we see 3 red weeks happen, there is a bit of a rally, 6 to 13%, and then the correction continues. Typically, what that signal suggests, and I'm talking specifically about just 3 red weeks, very simple, I think, to understand that you just need a closing price below the open. And this is on a longer term. We're looking at a weekly. We're not looking at daily stuff, because through this whole period, I've been posting about it for over a month now, talking about these signals and how, yes, we will see a rally. There is always the 2 camps, one saying it's just going to keep going up, and the other saying, you know, that one saying the signal's wrong, it's not working, and the other one saying it's going to go down, it's going to collapse. And so I think people just need to follow the signals that are working for them and that are working for their portfolios. And in this case, as we've been tracking for many, many months now, coming on to years, because we've seen this signal going all the way back. You could test it all the way back throughout Bitcoin history, but more importantly, going back to 2023, it typically shows that we're going to see another push down, another correction, another fall in price to somewhere around the low of that 3rd bar, at least to test the low of that 3rd bar. So where the signal comes in, somewhere to test around there. So that's around 107. Now I'm looking between 107 and 110 because there's been some other price clusters there as well. Not to get too far ahead of ourselves, we've seen the rally, and now this week, as it just opens, has pushed below last week, which now turns the swing down. So you can see the yellow line in the background is our Gann swing chart. That has turned down. And the prices obviously have begun to fall from there. So we've got the daily chart now. We've seen the days down. There was the test of the high there at 118,000. That has been a critical level because of the announcement of the announcement, which many people in crypto are pretty aware of, happens all the time. Jay Powell said on the 22nd of August that interest rates needed to be cut because of what was happening in the economy. There was some extra data around unemployment and things like that were coming out at the time. However, they're in a bit of a sticky situation because of inflation data. So the prices keep going up everywhere around the globe, or in particular the US. So they're in a sticky situation essentially. They want to cut rates for a particular reason, but they can't cut them for other reasons. So we've seen just 25 basis points drop. The announcement was on the 22nd that he was going to cut rates. We've had to wait until the interest rate meeting or the FOMC meeting that discussed the interest rate announcement, and that was on Wednesday the 17th, but of course on the chart here we're looking at the move slightly higher on the 18th, so the day after there was a rally into that price. No daily closes above that price. That is the high of the announcement day. And since then, the market has sold off and gone below this swing low and the swing low there. So basically, just looking at a price here around 114. So today, it went below it, hit 114,200, and so it's sold off after that news event. So the movement down has been larger than the move higher. Therefore, one could argue that it was a sell the news event. It was a rally into the announcement, tiny bit higher to test the tops, taking out those stops, probably people or traders who were going to go long on the breakout, got them in, and then came back down from that price and taken out the lows now. So it's a very choppy market. It has been very choppy since the 11th of September. You can see that the price range has basically been right through 114 with a couple of tests at the high end of 117. So basically $3,000 for the last couple of weeks. And now we're getting a slight breakdown here. So that's what's happened over the last 11 days. What happens next? Well, we have our 50% levels to watch. So from the low to the high comes in at 112,000. Yep, 112,600. And the other 50% here is the double top that I'm watching. So if you were to trade this, what traders are looking at, you can see that the top to the top and then project that down is the $112,900. So there's a bit of a price cluster coming in here at the high end of the 112s, and then of course the $112,000 level, which we've been watching for the market to break above on the way up, which was the previous swing low. So should Bitcoin keep falling here on the back of our 3 red week signal, which has not been invalidated yet, we've not seen a break of the high, 112,000, where the signal begins from. We're watching to the downside, and for the short term, the support comes in around 112 to 113. So that's where that the market should be watching for that level. Do we get support and a bounce? Good for the bulls. Can try and test the 118,000 again, which is basically our 7-year resistance line, the white line up here. It's been slowly climbing. You can see back, 2 or so weeks ago, it was 117. Just last week, it got to about 117,600. And then by October 1st, it's going to be sitting somewhere almost dead on 118,000. So that level is still in play. It's basically been rejecting the market now for the last several years. So it's not all bad news, even though it's correcting at this stage. There's still some support levels below. Should Bitcoin break that, then the likely scenario is a retest of the lows back here around 110, as I said earlier in the video, back to the lows at around 107. And then of course, there are people calling for sub 90,000, which takes you back to this area before it broke out. So that was after the tariff crash. The market rallied back up, broke through those highs there around 89,000. That's where it broke through, and there's still calls of 90,000. But there's a lot of work for the bears to do before the price can get that far. 112 to 113, first area to look at. 107 to 110, as we just alluded to. And if it is able to do all of those levels, it gets very weak, breaks down on the back of our 3 red weak signal and the 3 down bar signal, which I'll get to in just a sec. Then the support levels come in around 102.7 and about 99.5. So we could look for a round number here, about $98,000 to $102,000. Plenty of serious support back there. That was the low before the market rallied to the current all-time high price. There was the 50% level, or there is the 50% level from the tariff crash low to the all-time high price, and our extension now. So the shorter term move here, this is your double top, looking for profit taking around those areas there, 150% of that extension. So plenty of levels there, I think, for Bitcoin should it break down. So that's the 3 red weeks. It's not invalid yet. We've seen a slight rally to the area that we were anticipating, somewhere between the 6 and 13%. We've seen that. It did rally to about, I think, almost dead on 10% from that low to the high. Look, 9.97. And we've just had this pullback below last week's low. The 3 down bars are also in play. You can see the red arrows here on the top, this is part of your GAN Swing Pro, which is probably a good area that I could tell you about. The GAN Swing Pro and TIA Premium. Links to that are in the video description. That's for the education and for the signals and indicators. But if you want something a little bit more easygoing to get into, the free reports are coming out this week. Tuesday, Wednesday, Thursday. Get your copies. Bitcoin, the economy, and altcoins as well. Link is where it always is. So the 3 red weeks tell us that the market is A, slowing down. We're not seeing these big moves to the upside yet because it needs time to digest. And B, there is a possibility that we could see a breakdown further. Now, we've seen these signals from highs before, but on a daily chart. So we've seen them from the December top in 2024, and they told us that the market is slowing down. So all-time high was 118,000. 1, 2, 3 red arrows. That's the indicator at work here, telling us lower highs, lower lows. The bears are in control. The bulls don't know what they're talking about. They're talking a big game, but they aren't in control. And that tells us that very, very early. Yeah, it rallied. Trump inauguration, broke by $1,000, less than 1% higher, and then it kept coming down from that point. So the bears really had a lot to say here and just pushed the market right back down. And we also saw another significant time back was March 2024 at that $74,000 top. If you weren't around in Bitcoin at the time, which I know a lot of people weren't, March 2024, it was exuberance. Thought we were going to 100 grand in no time. It hit that level. Bears took control, 1, 2, 3 from that all-time high price, previous all-time high price. And the bulls thought they were in control, but the bears were actually in control with this signal here. And there we go again with quick time in play here, jumping the balloons up and down. Anyway, the point being is that the bears in control and the market came back down from that. Now we've got heaps of examples that we've talked about before on the channel. I won't go through each of those in today's video, but if you do want to do the work, of course, check it out. Otherwise, we can continue to carry on. So Bitcoin looking a little short-term weakness here. Plenty of support in the background for the longer term. And as we get to the S&P 500, there's still, I think, some pretty good strength for the traditional markets as well. And it seems like the narrative has been shifting more towards the S&P 500, the Dow Jones as well. So basically traditional finance picking up the slack here. Bitcoin and altcoins, sure, they were moving, but they've started to pull back, as I'll get to a little bit later. I think it's important to check where the market is at right now. S&P 500 has hit 9 new all-time high weekly closes, 9 out of the last 12 weeks. So as it broke to a new all-time high after the tariff collapse, that's what it is here, April into the lows, late June 2025, new all-time high price. Then we had another new all-time high here, new all-time high, new all-time high, new all-time high. You get it, there, and the last 3 weeks have been all new all-time high weekly closes. So there is still a lot of strength in the background and what's been going on here for the S&P 500 on a daily chart. Again, new all-time high daily prices, daily closes, and it just keeps skyrocketing. The thing to note, however, is our 5-year cycle. So we've been tracking this for months on the channel from that tariff collapse, and it's been working relatively well. This is the red line in the background. It's pretty much at this point now. So we're at a seasonal time. If that's unfamiliar to you, TIA Premium is a place to go for that. This is learning about seasonal time to anticipate turns in the market. This helps with the portfolio, so we're not making decisions at the wrong times. Now, around these times here, 5 years ago, there was at least a pullback and some consolidation for the market to continue on. That's what we're watching for at the moment. So give or take some time. It doesn't have to be on the exact day, as you can see with the movement higher, but it has been working out very, very cleanly through these last several months. April low, that's the red line back here. You can see even clearer now if I turn the yellow line off. We'll keep the yellow line on and take the chart off here. So let's take the bars off. And that, you can see, lows, higher lows, and just keeps climbing higher. So we're at this time here. Do we get this pullback and some consolidation before it continues on its merry way? That would be, if it was, that would be the ideal time to be getting into the market. However, there is still a lot of bearishness for the S&P 500. So even though it's at all-time highs, the sentiment isn't at extreme greed. The AA, like the sentiment surveys, aren't at extreme greed either. They're not even at bullish levels. There is still so much bearishness for the S&P 500. I think it is probably unlikely that we would see anything sort of significant in terms of a correction for the S&P 500 because the sentiment just isn't there. The sentiment of mass FOMO is what you need for a top, not fear. Fear is for a bottom. Mass fear is for a low. So even if there was to be some sort of short term, the corrections so far to the extremes have been basically single digits, 3.5%. Some of the smaller ones here, 2-ish%. Even the small gap ones here are less than 1%. So you can see a few of the highs coming in about 6,500 points, and we've hit my first targets that I set at the beginning of the year for the S&P 500. S&P will close higher, at least 6,700 in 2025, and I posted about this on the 2nd of January this year. So I think we've still got further to go in the S&P 500. I've since continued with some price targets for the S&P 500. If you want to read up on the forecasts I made, the updates that I've made to those forecasts as they've been playing out over the last 12 months, that's for the traditional finance. For Bitcoin, for the real estate cycle, check out my X account. Link is in the video description. Plus, a very important point here so you don't get scammed. I have a lot of people thinking that my Instagram account is sending them things to do with trading bots and whatnot. That is not my account. This is my only real Instagram account in the video description. It's just gotten a little bit crazier of late, and I just wanted to make a mention of that. I don't want people sending these scammers money on Instagram. I'll leave it up to you. You're all adults here. These are the only ones here. I don't have WhatsApp groups. I don't have Telegram groups. I don't have any of that. Okay, so things are still looking relatively bullish. Sentiment, I don't think, is there for any sort of significant collapse. And in terms of the NASDAQ, which is also hitting new all-time high days, daily closes, day prices, weekly closes. Again, still more upside here for these markets. The Dow Jones, new all-time high prices, new all-time high daily closes, weekly closes, so on and so forth. Still a lot of bullish price action, but the sentiment is not matching it. That is a good thing. That's an absolutely good thing for these markets. The Russell 2000 has hit a new all-time high price. Pulled back on Friday, but it's hit a new all-time high price as well. And the volatility index is in what I call the bull market zone. So it's still between 11 and 17 on the volatility index. That's still looking pretty good for the foreseeable future for this bull market, which is why I still think it is still good times for Bitcoin, even if we were to see a pullback here. There hasn't been any sort of signs to suggest that the game is over yet for Bitcoin. And we've been talking about Ethereum pulling back somewhere in the vicinity of 20 to 30%, like it typically does at each of these tops, especially after a prolonged period of upside. And we've gone through and covered this in recent videos, looking at time frames for ETH. How long can it go to the upside before it needs time to consolidate the move? And that number came out at just short of about 5 months. Ethereum has done the 5 months, 1, 2, 3, 4, into the 5th month. It was around 130 to 150 days. That's why we're looking at just short of 5 months. And then it takes some time to consolidate the move. Being that ETH is above these highs now of $4,000, we're hoping, at least the bulls are hoping, that it consolidates above $4,000. Even if it tests a little lower, you want to see those monthly closes above the $4,000 level. That's going to be stronger for ETH. But pretty much right on time for Ethereum, we've seen a very similar thing happen. The market stall, and it hasn't continued to push higher because, as we talk about with analysis, the timing is up. It needs time to consolidate the move. It's exactly what has happened here. And you can see from this chart, we've also talked about abnormal bars. You can see this one here was an abnormal bar. This was an abnormal bar, and that was an abnormal bar. Abnormal just means a large range, basically FOMO coming into the market. It can be fear as well to the downside. But from these abnormal bars, that's this one here, it doesn't really have much more room to run. So it might push a little higher, and then it basically consolidates from there. Abnormal bar, push a little higher, consolidates. Abnormal bar, pushed a little higher, at the moment consolidating. So everything has been happening pretty much on point for Ethereum as we run into what I think is going to be the end of the cycle. It's been going on quite some time, over 1,000 days now. So for crypto data, and then I've got some Bitcoin and Bitcoin price data to get through as well, price targets. USDT dominance has been holding up relatively well, which is not great for the bulls that are crypto and Bitcoin, of course. It's found another base at 4.2% and has since climbed higher, so 4.4. The, I guess, benefit or the not so worrisome news here is it's still in a trading range between 4.1 and 4.5. Some of the extremes at 4.6 and the lows here at 4%, but essentially in a trading range. So it's still just money going from one asset to the other assets to stablecoins. One asset being Bitcoin, potentially into the strong alts, Ethereum, Solana, whatever is the next latest thing, and then taking profit, putting it back into stablecoins. That's this pattern here. Basically, cryptos trying to make money, taking profits, making money, taking profits, making money. At the moment, it seems like the market is more so in a taking profits sort of mood, especially looking at USDT. So that's the USDT dominance. Remember, the breakdown below 4.1 now is going to be some good signs for the bulls, and the biggest one we're waiting for is a breakdown of 3.7%. That could be basically all game on, party, and just get absolutely crazy with your portfolios. Otherwise, what we all don't want to see, party would basically begin to be over. A lot of people will start leaving. Probably some sort of breaks above 5.2%, and we've been looking a lot at 4.8 to 5. So that's this zone right here. That's where we don't want to see the USDT dominance go. If that is to happen and it happens to hold above that level, that's when we need to start shifting our portfolios, thinking about maybe this thing is looking like it wants to end. But for now, it's not there. It's not there, so we don't have to worry. USDT dominance plus USDC, looking very similar here. It keeps getting higher lows. So if this goes up, bad for Bitcoin cryptos. If this goes down, good for Bitcoin and cryptos. At the moment, it's trending higher with higher lows. So we've got to keep a watch on that as well. Make sure you are subscribed to the channel, notifications, all that sort of thing, so that you do see these videos so we can keep tracking this all together. Again, still in a major trading range here for USDT and C dominances. Now the others chart, so we're going from stablecoins to cryptocurrencies. We see this get rejected again and pull back here. So it's at 8%. This is on a weekly chart, back into the zone of 7.8 to 8%. It attempted it the last couple of weeks, couldn't get there, and has pulled back. So these were the levels that we've been watching. We want to see a breakout of 8.9% for a round number, call it 9%. That is going to be your first signs that an altcoin season could happen, but there is an absolute ton of resistance between 9.5% and 10.5%. So it could just be another not super exciting altcoin season because there is so much resistance overhead, which is why I think it is still so important to either A, be on red alert trading your markets if you want to trade, but the buy and hold thing seems to be grinding to a halt with the dominance of altcoins falling. You get this small moves higher and it just keeps falling. So it's telling you here as a fact, the buy and hold is not a great strategy for at least this entire cycle. You can go back to January 22. So basically the bear market and this cycle, that's just reading the chart there. Dominance down does not mean it's a good thing. Dominance up means those altcoins have been outperforming, but at the moment they're still struggling here. The total crypto market caps, including Bitcoin, holding out relatively well. I've still got this in the very late sort of final stage, provided it consolidates above roughly 3.4 trillion and 3.6, because you can see these highs here and the lows. So ideally forming a base above this level, even if there are some spikes. So still in a relatively okay stead there. Total 2, this one excludes Bitcoin, so the ETH and the altcoins hit I think it was almost a fresh all-time high. It did do it the last couple of weeks and has since pulled back, so still consolidation happening between 1.5 and 1.7, still could be on for another move higher, even if this has time to pull back. As we've talked about, time seems to be at that length here for Ethereum and for Solana, as I'll show you in just a sec, which means pullback before another move higher. That's essentially what all the charts are saying. Total 3 pullbacks. This is excluding Bitcoin and ETH, but stablecoins and all other altcoins included. Also pulling back after hitting a new all-time high price. So again, could just be winding up for bigger things. Ideally, it needs to stay above 950 billion. So essentially looking at these charts, consolidating where they are and to the support levels, still good things. They break underneath that. That's when you got to start thinking about this time, market could be over and it might be worthwhile taking some profits. If you have no idea about that, freaks you the hell out. That's why I say and suggest looking at TIA Premium to get your plans together. You don't want to round trip these things just because some fool on X has been saying buy meme coins and you're going to be rich and live forever. That sort of BS. The meme coins have also been hit very, very hard, some of which have not recovered. Others are just essentially a meme and people just keep chucking money at them week after week and they keep going down, looking like they might want to be in a distribution pattern. So bit of a boom higher and then they just keep breaking down. Watch some levels here. As an example, SPX underneath sort of 90 cents. Going to be a little bit tough times. And if it does break below sort of 40 cents, yeah, we'll cross that bridge if it ever comes to it. So that's a look at the altcoin market caps. As for ETH, Solana, and some of the other majors, ETH we've discussed. Solana, on the other hand, is at 230. Still not in a bad position here, but it is starting to slow down on this move, which was expected because it's done 5 months to the upside. The last time it did from a significant low to a significant high, 5 months. Last time before that, 6 months, there's the low to the high. Time before that, from the cycle low to the top before the 2-month pullback, 7 months. So it's in that time period here. Do we get a pause for October and then a boom for November? Ideally, yes, and it keeps going higher. There's a lot more I need to talk about with Solana, but this video has gone on long enough. One in particular are the price ranges. They're not stacking up just yet. Support to the downside, looking at 195 to 210. So it's still looking okay at this stage, even if it has done its 5 months so far. And you can see from the previous cycle, it's just that energy that Solana has. It's run out at this stage, 4 months to the upside before a significant pullback, 5 months to the upside before a significant pullback, 6 months to the upside, bear market ensued, 7 months, 6 months, 5 months, 5 months. It's getting a little bit worn at this stage. Still not over yet. And XRP, the big one that I've been talking about with timeframes on XRP, 14 months we're in, 12 months from the low to the high is basically all that XRP has done over its entire history. Every time it goes from a significant low to a significant high, it basically does about 12 to 14 months. So we're into that 14th month now. Could this be the end? Maybe. You would need to see a breakdown of roughly $2 to really think about that. For now, it's still holding up all right. So maybe we've got this sort of last ditched effort to push us into 15 or 16 months before things start to roll over. I know it's not what people want to hear. It's just what the charts have done through its entire history. Therefore, I am not going to disregard it just because it can hurt people's feelings about what they think XRP stands for and means in the world and all this sort of BS. Like and subscribe. One more to go. Bitcoin price targets. They're still holding out here, even though we got rejected again at 117,000. The upside, we're still watching for any sort of movements into the mid 130s, hopefully 160s if we can get some sort of extra cream on the top. But for now, we're watching for any sort of breaks above the 120s. This is the upside. And then to hit our first price target above 120 in the mid 130s because of the price clusters that come in here. So again, if that's new to you, definitely hit the subscribe button. If you guys are enjoying that, let me know in the comment section. Oh, and as I said, gold and silver. Gold and silver before I hit Bitcoin's cycle. I know I'm jumping here, but bear with it before I forget. Gold, new all-time high prices last week and has rallied relatively well. And silver, new all-time high prices today. New all-time high weekly close last week. So things are still looking relatively good here. So it's given me another few more ideas to cover a lot of videos with you, especially transitioning portfolios through the cycles. You can see we've got our 18-year cycle coming to a head. That's the older one. The update is down here, getting much, much closer. We need to start rotating monies through different asset classes based on their strength and their position right now. Finally, the Bitcoin cycle curve has also started to pull back here. The actual and our cycle for the 10 and the 5-year combined is the red line, also has a pullback right here. So, as I said, plenty of exciting updates coming this week. I'm over here in Bali, Indonesia. If you're around, let us know. Hopefully, head out into the surf very, very soon. All right, that's enough for me right now. I'll see you guys at the next update. Take care and chill out until then. Peace.